Thank you very much, Tim Topper. And good morning, everybody. Thank you very much to Aluko and Oyebode for inviting me to give this very short keynote. What I'm going to be speaking about for the next 10, 12 minutes is really the regulator. What's the role of the regulator in trying to enable innovation in this brave new world of fintech that we're in right now? First of all, talking about what the traditional role of the regulator has been. And in no particular order, regulators, whether you're in finance or communications or food, one of the number of things that a regulator is supposed to do. First of all, promote effective competition, protect investors who are investing in companies in that particular sector, promote or enable an efficient, stable, and a fair market, and protect consumers. And in the case of financial regulation, what they also are supposed to look at is the integrity of the financial system. And then to talk about innovation, because we're talking about regulation, stakeholders, and innovation. Innovation has always been with us. You know, I'm old enough to remember the very first ATMs. I'm old enough to remember when InterSwitch first started. These were big, grand innovations in the scheme of things, and they seem like normal to you now. So to say that innovation has always been around, but I think an innovation, particularly in financial services, has always been around access, affordability, new products and services, convenience, speed, and inclusiveness. So any innovation you see in financial services is really trying to address one or more of those different factors. But what has changed now is that innovation has been occurring at an unprecedented speed and also unprecedented scale. And primarily because of the advent of this device called the mobile phone. So what has happened is that innovation, the barriers to innovation have been lowered, the barriers to entry have been lowered. There is more innovation, there are more innovators, there's more disruption in the financial services industry, which will make for a fairly dynamic and a very fast-changing context. And so the regulators have a new role. There's a new mandate that regulators have. And the new mandate that they have is to enable innovation that benefits customers, consumers, while guaranteeing financial stability. And so there's no, I know people ask the question, which comes first, the innovation or regulation? It really is a moot point. You know, both of them, they've got to be in tandem. Regulation can't come before innovation. Innovation before regulation could be disastrous sometimes. So it's really about having the two in tandem. But right now what has happened is that there's so much innovation going on that it's really very difficult for the regulators to keep ahead or on track of the innovation, and the innovators don't want to be stifled by a regulator that is holding them back. And so there are many things that need to happen for this enabling environment to really help us to spur and to facilitate and to support innovation in the fintech industry. And I just want to mention a few of them. I know that I see there's some regulators in the panelists, and that's fantastic. I know that some of this is going on now, but I think I'd just like to reemphasize or revalidate the importance of some of the things that are happening with the regulators and the industry. The first thing is engagement. You know, regulators have to engage with the industry or the sector which they're regulating. And the way that you regulate is, first of all, to socialize your agenda. It's very important. A regulator cannot hide what they're trying to do and then catch people up because they don't understand what it is they're trying to do. Socialize your agenda. You know, now we hear about cashless Nigeria, we hear about mobile money, different things that the regulator is trying to do. Socialize that agenda, and in socializing your agenda, what you then do is to develop and understand, you enable the industry to develop an understanding of that agenda, you also, and an appreciation of that agenda, and innovate, and you also get a chance to understand what innovators are doing. And what that engagement allows you to do is to actually begin to align your agendas, align the agenda of the regulator and the innovators. And in doing this, you do a number of things. You build trust between regulator and the regulated, and you also begin to build for the regulator the skills and competencies that are required to actually effectively and efficiently regulate that particular industry. I know that the notion around regulatory sandboxes, I think CBN is looking at having one where you actually allow experimentation within a control framework. But that engagement between the regulated and the regulator is very, very important so that agendas are aligned and agendas are socialized. The second thing is collaboration. And this collaboration not between the regulator and the regulated, but collaboration between the regulators. Fintech is not banking. It's not banking. And right now, today, what we see is that there's a dominance of the Central Bank of Nigeria in regulating fintech. We see all kinds of fintech. There's agri-tech. There's agri-tech where you actually offer insurance. That's a fintech. So fintech actually covers many, many areas that is not banking. It covers transactions, payments, savings, credit, insurance, investments, asset management. And so, in terms of who should regulate the fintech, it actually is a number of regulators. Many sectors involved. I know SEC is here today, CBN is here today, the National Insurance Commission, Insurance is Financial Services should be involved, the NITSTA, because of some of the privacy and data issues that we will see as we begin to have more financial technology companies in this country is important. The CPC, the Consumer Protection Council, is important. NIMC, because identity becomes a very important point of financial inclusion, and I said SEC. Now, I'm not trying to scare you by saying that you have to have all these regulators looking at the industry, but just to make the point that every regulator has an agenda for their own particular sector that they're looking at. And so it's important for the regulators to collaborate and also align their own agendas. Just to give a very quick example, I know when I was minister, that was when mobile money licenses were being given. And the CBN was really gung-ho about mobile money and what it would do for financial inclusion and all of that. But at the same time, the technology, the communication ministry was worried about the vulnerability of the infrastructure. It was very fragile. People were complaining about drop calls and all kinds of things. That was the time when Boko Haram was at its height and blowing up mosques all over the country. And so we were concerned that this was an infrastructure that was actually very, very constrained and very fragile and vulnerable. And yet here was another regulator looking to unleash this, all these transactions onto this very vulnerable infrastructure. And so CBN didn't speak to us. And I remember then having to go and speak to CBN, or they come to speak to us actually when they realized that they had to come and speak to NCC. And the two regulators had to get together and think through how do we do this in a way that addresses CBN's agenda of mobile money, but also ensures that we don't put this infrastructure under unnecessary constraints. So to make the point that it's important for regulators to collaborate, because fintech really cuts across different sectors of the economy. And if regulators are competing, all it does is that it actually, it actually constrains the pace of innovation and the impact of innovation that we could see in this country. The third thing I want to talk about is for regulators to get out of the way. When you have set the framework, set the boundaries, set the rules, you need to get out of the way and let the real innovators do what they do and do it best. It's very tempting for regulators to participate, especially in this country, for regulators to participate in an industry. And that is because they want to create a level playing field, they want to standardize, and so they get involved. And really what that does, and I see that Kola and Maya are here, they're investors. When regulators or by extension government gets involved in industries that they were not involved in, all it does, it just spooks the investors. I remember very clearly, just to give an example, we were doing due diligence on a couple of fintechs who were building out agent networks. And we're looking at, how efficient were they building out the agent networks? How well were they using the capital to build these agent networks? And it was at the same time that CBN now started this, I think it was the SANEP, I think, but they were basically trying to build agent infrastructure that was common to all the different fintechs. While this was a very good agenda, what it did for us as investors was that it really spooked us, because they were then giving capital, instead of setting the laws and the boundaries and the framework, they were now giving capital to fintechs to actually go out and build these agent networks. And it spooked us because we felt that if they're intervening here and now, where is the next place they're going to intervene, and how does this conflict, or how does this constrain competition and really allowing the best players to rise and the best players to win? So when regulators get involved for whatever reason, whether it's setting a level playing field or creating infrastructure, it really spooks investors, and again, it constrains innovation and constrains capital that actually comes to fund and for that innovation. Finally, I want to talk to the fintechs themselves, because I'm sure there are probably fintechs in there. Well, Odu is here, she's a fintech, and I'm sure that a number of fintechs are actually also, fintech innovators have signed on to this seminar. And that is, whatever way, shape, or form you are a fintech, whether it's insurance or credit or savings or payments, whatever it is, yes, you're innovators, but because you are offering a service to consumers, you are going to be regulated. So there's no point wishing regulators away and not wanting to know what they do. It's important that you make your business to understand where your regulator stands, understand your regulator's agenda, understand how the regulator is thinking, so that you are not caught unawares when the regulator comes out with a different set of rules. You, as I said in the very first point, you engage, make sure you're part of that engagement when they're white papers, when they're policy papers, read them, go to all the different events that are around, looking at those different papers. Engage your network, keep your ear to the ground to understand what is happening in your industry and how whatever comes up with regulation doesn't constrain you or affect you. And finally, to say that industry associations are important. There's power in numbers. And I know that when I was in government, it would always made a lot more sense to me when the industry came to me as an association or as an aggregation, instead of trying to solve every single company's problems individually. So associations make sense if you have the right rules and you have the right people leading the associations, because there's power in numbers. So that's really all I have to say. I know that it's a very short keynote, and happy to take any questions later on. Thank you.
Thank you so much, Dr. Johnson. That was quite educative. I think there's definitely a need for collaboration between the regulators and the fintech companies, and a need for the regulators to also engage the fintech market so that they can properly understand the mechanisms of the market. Thank you. So we'll just go straight into the panel session. And my first question is to Kola. Now, as someone who has a key vantage position as a partner in Ventures platform, do you think that we are currently innovative enough as a country, given where we are, the pandemic, its effect on the economy and all of that? And do you think that the relevant stakeholders have either pushed for this innovation or probably stifled it with their activities?
Sure. First of all, I'd like to thank Aluko and Oyebode for putting this together and inviting me to join this distinguished panel of panelists. I'd also like to acknowledge Dr. Johnson's keynote that was practical, apt, and really spoke to the issues. There's been an overload of panels, and I've been on 3 panels today already on different topics, and so I'm really glad that this one is unique and focused. Regulation and innovation is something I often talk about, and one of my closest intellectual friends is a gentleman called Efosa Ojomo, who's obsessed with the role of governments, regulation, and innovation, and how that creates prosperity. And I think when we think about regulation and innovation as Nigerians and as Africans, we must be careful that we don't think about it like we're a developed country. We must be careful that we don't think about it from a textbook perspective. And we must think about the way we regulate and innovate within the context of our realities, which is that we are a poor country. We are a country that seems to be getting poorer, and we have a large population that is largely underserved. And so when I answer the question as to are we innovating enough, that's the way I think about it. Now, looking at the classical definition of innovation, it will be uncharitable of me to suggest that we are not innovating. We certainly are innovating. I mean, a couple of years ago, if you wanted to set up an online shop to sell hair or whatever, it will probably take you, our software company at the time will build websites, and it will take months to try to set up an online payment gateway on a website. Today, you can do that in 30 minutes, perhaps even without a bank account, right? Maybe like a holding account, pending when you get with some limits when you get a bank account. And so I think there certainly is progress in terms of looking at the classic definition of innovation. The challenge that I see is really when we start to ask the question, are we innovating in the right ways that are most relevant to the Nigerian reality? And that then leads you to look at the different types of innovation. And, again, there are different ways to define the types of innovation, but the definition I like the most is the one that's adequately explored in the book that I referenced earlier called The Prosperity Paradox, which looks at 3 different types of innovation: the sustaining innovation, efficiency innovations, and my favorite kind of innovation, market creating innovations. And I'm glad that we have Odunayo of PiggyVest, who are one of our portfolio companies that we're really excited about what they're doing on the panel today. I think PiggyVest is the best example of a fintech that is a market creating innovation, in the sense that market creating innovations innovate in ways that open up goods and services to segments of society that ordinarily would not be able to afford or access these goods and services. So before today, the millions of users on PiggyVest didn't have access to a competitive saving product or competitive saving rate simply because the bar of entry was simply too high. And with that kind of innovation, you now have more young people participating in savings. And so I think that is where we need to focus our attention and our energy. So as regulators, I think that regulators need to think about regulation from the lens of enabling those types of innovation, because it is when we focus on creating, these new markets and bringing underserved communities, which make up the vast majority of our population. That's how you create prosperity, and that's how we truly move society forward, as opposed to the efficiency innovations and sustaining innovations that only benefits the wealthy or improve the margins of the corporates, which is great because I invest in companies. But I think there's a way to, innovate that benefits society at large. For a couple of years now, we've been talking about financial inclusion. But I think if we truly want to drive financial inclusion, then we have to look at the kind of innovation that we support. And now I will advocate for market creating innovations. Now, to answer the second question, I'll round off very quickly. You talked about the roles of the different stakeholders. I would like to center today's discussion on the regulators. And I think as an opening remark, I think it's really important, that the regulators, we need to answer the question, and Dr. During the keynotes, the question wasn't quite answered. I often ask myself, should regulation precede innovation, or should it be vice versa? That's a question that we have to contextualize within our stage of development. Another question I ask myself is, should regulation focus on optimizing for protecting against loss? By loss, I mean the loss of maybe the market, consumers in the market, or rather enabling progress? And to end my remark, I'd like to share a short story. I once had a conversation with one of the directors of the Central Bank of Lithuania. Lithuania is a small Eastern European country that is now one of the leading fintech markets in Europe. And he told me this riddle that, Kola, I consider my role as someone who's watching cattle or a herd of cattle. And the head of cattle are the legacy banks, like the big legacy banks. And on this cattle, you have all these bugs perching on them. The bugs, by the way, are the Fintechs, right? And the bugs are innovating and, as he put it, sucking the blood from the cattle. He says, look, my job is to ensure that happens in a stable way. And there are two possibilities. It's either the cattle become healthier, leaner because of the pests, and they become more effective and provide better services and reduce their costs, or they don't survive the onslaught and the pests suck all their blood and they die. Ultimately, the consumer wins, right? Because the consumer gets more innovation, cheaper goods and services. And I was blown away at that view from a regulator. Now, I don't think it's either or. I don't think fintechs are here to replace legacy institutions. But I think, we need to put on a different lens as we think about regulating the innovators in our space, particularly because of the state of our development. Thank you very much.
Yeah, thank you, Kola. I think you hit the nail on the head there when you're talking about innovating the right ways and benefiting society at large. And our next question will go to Odu, and still on innovation. I'm sure everyone here is impressed with what you've achieved with Piggyverse. Now, what has been the most significant impact of the pandemic on Piggyverse, both positively and negatively? And what steps will your organization take to build on those positives and mitigate the negatives in future?
Right. Thank you again for having me here. Really glad to be here. So I think that what we've seen from the pandemic is, I think it's pretty much a generic effect, is that more people want their finances in places where they can access them. So we've seen an uptick in the number of people who want their funds in the accessible wallets than people who want it in the restricted wallets, which is not necessarily a bad thing. I think that that indicates how much trust that we've managed to build in the market, that people are not pulling out their funds completely. They're just moving them from a restricted piggyvest wallet into a flexible piggyvest wallet where they can access it. And obviously, naturally, because of the economic state of things, where we had more people lose their jobs, we had more people get salary cuts, we had more people get retrenched, furloughed, and all of that. We've seen more people also withdrawing funds to be able to take care of their responsibilities, and we ourselves had to step up and take down the penalty fee for withdrawing when it's not your withdrawal day from 5% to 2.5%, just so more people have access. So on the positive side, though, what we've seen is what we've always said about Nigerian millennials, is that there's still an outlook to the future, where while people are really intense about the present and how it will turn out, there is a large percentage of people who are focused on the future. They are focused on after the pandemic. And so we've seen more people actually create savings and investment plans, and this time around more long-term than ever before, where they are investing for January, they're saving for January, because according to the conversations and the surveys and the feedback that we've gotten from them, there's going to be a life after the pandemic, and they would definitely like to be financially prepared for that, which I think is very impressive and speaks to the resilience of our audience, that is the Nigerian youth. So how are we building up on that? I think it's continuing to work in a way that fosters the trust of Nigerians in us, right? When we started in 2016, it was like an uphill journey to go from telling people to save in large institutions to save in fintech, right? So we've built up some trust over the past 4 years, and more than anything, this pandemic has been a test of that trust. How human is the brand? How should people continue to relate with you? Is that trust still there? And so far, so good. So we are investing in risk-free instruments as usual, working with SEC licensed institutions to make sure that funds are always safe, and doubling down 100% on being customer-centric. Piggyvest has always been a user-focused brand, but this time around it's being more directing all of our energy into doing what's best for the users. People who weren't prepared, we're now helping them to even prepare more. People who were prepared, we're helping them to create a more comprehensive outlook for after. And more importantly, we have a laser focus now on education and financial literacy. One of the things that the pandemic has exposed is that the world as a whole was not prepared for something of this magnitude. So on an individual level, people were also not prepared. So we've started a webinar series that we will continue when people are able to now gather in physical locations, about teaching people the granular areas of savings and investing. How can you start with the basics? And for people who are already experienced, how can you continue, right? We have so many fintech companies in Nigeria that we can work with, but as people who started companies before, we're a bit worried about the collective readiness of people on our platform, like investing in stocks, for instance. And so we know that there's a lot of education that can be done, and that's what we're doubling down on, and we want to change that through extensive financial education.
Okay, thank you for that. I'm glad Piggyvest is innovating around the pandemic and finding ways to still cater to the users. Now, drawing on what Dr. Johnson and Kola have said, we all know you're building this business in a successful sector where some believe that the rules are not significantly robust, and others believe innovation should drive regulation and not the other way around. What is your take on this? Do you believe that the current uncertain or inadequate regulatory landscape governing technology companies in Nigeria has stifled the growth and innovation of the ecosystem? And are there other problems that you consider to be the major barriers to innovation in Nigeria?
I wouldn't say it has stifled. That would not be an honest position because of how Piggyvest has been able to grow. So while there are still inconsistencies and there are still gaps to be filled, I will say that so far, best efforts are being made. Now, is there ways to go? Yes, right? But the environment that lets piggyvest start and grow to this level is somewhat enabling. Now, can we get more startups in that vein? Can we get more people able to start companies like this? Yes, we need to be able to. But as of now, my opinion is, yeah, the regulators are trying. But now, like Ms. Johnson said, there is a bit of concern that we might be over-regulated for the size of this market, right? Especially fintech companies that kind of draw on different aspects of different financial sectors to create a product. There's fintech companies that save towards microinsurance. There's fintech companies that save towards stocks. There's fintech companies that save towards cryptocurrency, right? So some of them don't fall under one umbrella, we inclusive. So how can we create their umbrella? How can we create their own regulation? Innovation, to me, will probably always precede regulation. And what we need to be looking towards is the willingness of regulation to meet innovation midway. I think that I would speak for most fintech companies when I say that none of us wants to run afoul of the law. We all want to be compliant. We know that we will be regulated. We just want a bit more clarity on how we will be regulated. We think that financial inclusion is an admirable goal, right? But one of the ways to drive massive financial inclusion in Nigeria is via fintech companies, and we would definitely like to work with them on that, right? The US, for instance, is doing a lot with fintech companies. We saw during this pandemic that Cash App, Square, and all of those fintech companies were one of the apps employed by the government to distribute palliatives to the population. Why not here? Why not Nigeria? Why can't we do that in Nigeria? So that's kind of how I see it. Innovation, people would probably always think about new solutions faster than regulators can regulate them. But there's definitely a way to strike a balance to make sure that everything is still in order and regulate against loss and against extremism.
Thank you so much, Odun. I guess the feedback from the fintech companies and the investors really is that innovation needs to meet regulation halfway. So we're going to hear from Mr. Agama. The equity market represents a significant growth driver, and in other jurisdictions, apart from Nigeria, as much as 40% of households have access to the financial markets. I guess the question for us is the SEC willing and able to champion a change in legislation that would simply allow people make investments by clicking their devices? And on the other hand, when can we begin to see a traction regarding crowdfunding in Nigeria?
Hello. Yeah. So thank you so much for allowing us, for allowing me to be here this afternoon and to give perspectives as to what is happening at the SEC or the Securities Market Regulation. For us at the SEC, our primary responsibility, like Dr. Johnson just mentioned earlier, is to protect the investor. First and foremost, the investor. The investor is king in terms of securities regulation. Besides protecting the investor, we also have a dual role of providing a level playing field, a competitive environment that is properly guided. That's another one. However, Nigeria happens to be one other country that has a dual role in terms of its regulatory mandate, that is regulation and market development. So when you key in the issue of market development, you bring in the issue of innovation. So speaking to your point about how we intend to regulate the market, of course, with the law, with the change of the law, we are very, very market friendly. And what we have done so recently is we've started the review of the ISA. And indeed, as of last year, it actually went to the National Assembly. But we were fortunate enough that it was not passed because subsequently there were new things that came on. So we needed to rework it. So as we speak now, we are reworking the ISA. We are almost concluding that process. And in it, we are including everything that we could include to be able to address issues regarding fintech regulation. And what we have seen also at the SEC is that a lot of people, a lot of investors want to be regulated. A lot of fintech institutions want to be regulated. The reason why that is the case is to be able to be able to differentiate them from charlatans, because what we have today is an eyesore, truly speaking. You see a lot of people putting out advertisement as to what cannot be done or can never be done. And of course, the gullible investors are all going out there, and the end result is that they will be losing their money. So clearly, for the SEC, it is important that we work towards protecting the investor in the best way we can. And that is what we are doing. Besides that, I'm sure you all have seen the crowdfunding regulations from the SEC. Those regulations were issued some 5 weeks back, and I can tell you the level of response we got from the market was tremendous, to the extent that we have an over 250-page document to review in view of the contributions from the market. That's to tell you the level of interest that the market has in relation to the regulation of crowdfunding. And we have, over the last 4 weeks, been reviewing those contributions. Because for us at the SEC, what we intend to achieve is to dish out market-friendly regulations. And so if we have comments from the market, it's important that we look at those comments, review those comments, and see the appropriateness of those comments so that we can either change our stance or understand better and know what best to do for the community. Odun mentioned the fact that oftentimes innovation comes before regulation, and that is the case. For regulators and for the SEC, one of the things we pride ourselves in doing is to actually study the market. And Dr. Johnson also mentioned the issue of engaging stakeholders. It's one thing that the SEC had continually done. And that is why the SEC was the first to set up a fintech roadmap committee, which is a market-wide committee. What is the reason for that? We wanted the market to be involved in whatever regulation we come out with, so that our regulations will be market-friendly, pocket-friendly, and consumer-friendly. So that we have done, and we are continuing in that state to engage various stakeholders. We have been having relationships with FSD Africa and the CCFA, the Center for Alternative Finance at the Cambridge University, and also the World Bank, all in a bid to have regulations that will be useful for the Nigerian population. We will definitely not do textbook regulation, because Nigeria does not deserve a textbook regulation. We do contextual regulation, regulation that speaks to our environment, regulation that speaks to the nature of our investors, regulation that speaks to the education of our investors. So it's not enough to just issue regulation. How well will the investors understand the regulation? That is very, very important for us. How well would even the venture capital firms understand the regulation? What are the risks that that the investments are associated with that you need to deal with? And how do you educate the people to understand that beyond financial inclusion, there is financial deepening? And for us at the SEC, that is very, very crucial in order for us to build a system that we can all be proud of. Capital formation is crucial for economic development, and as such, for us at the SEC, we need to drive all of those processes because it's our responsibility.
Thank you so much, Mr. Agama. That's quite impressive. We take the feedback that the SEC is interested in protecting investors and is interested in creating a level field for all stakeholders. Now, before we go to our next panelist, I would just like to remind our viewing audience that we're still taking questions. You should have a Q&A chat box on your screen. You could type in your questions and indicate the panelists that you would prefer to respond to your questions. My next question is to Kola. Now, I'm very much aware that you're quite vocal about this on your social media pages. The Nigeria's Venture Capital Incentives Act currently gives tax incentives to venture capitalist companies. Do you think that there needs to be further incentives to apply to not just VC companies, but probably all companies in the tech space and the projects they invest in? And do you think that there is a need for stakeholders, as Dr. Johnson mentioned, to collaborate to either, push these incentives to be implemented across board?
Yes, thank you for that question, and it's quite timely because I only got to discover that Nigeria actually had a Venture Capital Incentives Act probably about 4 weeks ago, and it was such a stunning discovery for me. And I was once again reminded that we don't have a lack of laws or acts in Nigeria. It's oftentimes the implementation that becomes a challenge. And as we speak now, there's actually been an effort working with the NIPC and a couple of us in the industry. I believe Maya, who's on the call, also contributed to that, to get some, and I believe your law firm as well, Aluko, and Oyebode also was very generous to contribute. And the idea here is to say, how might we crowdsource inputs? Again, and this goes back to the whole conversation around collaboration between industry and the regulators and government. And I mean, I'd like to commend the SEC and the CBN because they've been doing that to a large extent. We can only ask for more. But what this effort is looking to do is this act that exists, but really seems to be out of touch with the reality of venture capital, angel investing today in Nigeria. Particularly when you look at it with the lens of technology and high growth companies. We've now been able to collate different inputs and opinions, and all of that has been put to the NIPC, the Nigerian Investment Promotion Council, who is looking to work on hopefully presenting a revised act. The NITDA is also working on this because, if we can provide more incentives, it ultimately helps to grow the access to early stage capital and even growth stage capital because you've provided that incentive. And a great and one of the things that I always suggest in these conversations is there's really no point in us reinventing the wheel. There's so many success stories around the world, and one that I like to point to very often is the UK government's investment incentive program, the Enterprise Investment Scheme, for instance, that have been adjudged as massively successful in transforming England to become, somewhat of a hub for fintech by essentially de-risking early stage investors, because really you need to promote that experimentation at the early stage to really see a spike in the innovation that you need. So yeah, certainly I think there's room for incentives for not just, I particularly think as well that for local investors, right? Because it's great that we have a lot of foreign capital, but from a nationalistic standpoint, we also run the risk of, having unicorns that are not owned. And I guess, that's neither here nor there. But I think companies like, my brother with Helium Health here can attest to the benefits of having local investors on their cap table, because oftentimes their ability to network and all of that is more of a local ability than something that can be offered by foreign firms. So I think there's a need for us to also encourage local VC funds, local angel groups, and the like to invest in our innovation ecosystem. I'll pause at this point for now. Thank you.
Yeah, thank you, Kola. I definitely agree with you there in terms of having local investors engaging with the tech ecosystem, and also your point on the industry being regulated. I think that ties well with what Dr. Johnson said about regulators engaging with the industries that they regulate. So of course, being aware of the different laws and the different regulatory guidelines. So in line with that, my question will go to Mr. Jimo. Now, fintechs are sometimes required to comply with the same regulations as banks, even though their operations are different. Similarly, the newly introduced payment service banks, which are meant to help drive financial inclusion, have a huge 5 billion naira minimum capital requirement, which of course limits the pool of potential licensees. Considering the key role played by fintech in facilitating financial inclusion and efficiency in the provision of financial services, does the CBN have plans to create regulations that are more fit for purpose for fintech entities so that the operations of these innovative enterprises can be enhanced?
Yeah, thank you very much. First, let me thank your company for inviting Central Bank to be a part of this discussion. Very awesome. I'd like to thank the keynote speaker, Dr. Johnson, for the elaborate presentation and other speakers that have shared their opinion. I think, before answering the question, I've listened to everybody, and basically everything points about how we can create an ecosystem where fintechs and other small businesses can actually thrive. And that is the primary objective of the new central bank, if I may put it like that. Now coming to your question, I do not think that we have the same regulations for fintech and then for banks. We are very mindful of the fact that they are actually different financial service segments. The banks provide the account information, services, and the fintech basically provide value-added services upon those account information services that the banks. So, and they are not of the same side. So, capital requirement for those companies are also not serious. We have a schedule of regulation that, if I have time, I could just basically to outlay the requirements for some of the fintech companies that we already have and then for banks. So I will just say basically that we don't have the same stringent control that we have on banks as we intend to have on the fintechs. The second one has to do with the payment service bank, where the capital requirement is 5 billion. I need to say that it's actually a bank, even though it's a niche bank where they use technology to provide financial services in order to financial inclusion, but it's actually a bank. And the requirement for being a bank, the kind of services, and the kind of other engagements that you have with the public. For example, you'll be receiving deposit, and you know what it takes for a company to take deposit from the public and also provide these technology services in order that they can use the money that they have collected from them. Yeah, 5 billion is the size of a microfinance bank, national microfinance bank. That's basically the level at which we see some of these financial technology companies that are providing payment service banking services. So, as much as people see the 5 billion as being too high, it is not. The payment service bank is not a license for fintech, companies who are providing just financial services, and I will explain why that. We've looked at all the licenses that we have in the bank, and we discovered that there are different tiers of technology companies that are providing financial services. And so what we have done is to streamline all the various functions that they provide and categorize them into 4 different buckets now. So we're going to streamline all the various licenses into 4 different licenses. And the consideration is to have, a window where small and medium enterprise companies, startups, innovators can actually come to CBN, to experiment what they have, exercise their innovation, and see how we can drive financial inclusion without going through the crucibles of the licensing process. And so, to be very direct, we started the implementation of the regulatory sandbox. Any moment from now, we'll be exposing it to the public for their comments. And the objective is basically to provide a window where the financial technology companies can actually come and play around with their innovation and even test it in a quasi-live mode, such that if they find that, this is viable and this can actually go into commercial mode, they can then approach the regulator to say what are the requirements for me to take this to a commercial level. So we are providing a window now where you can actually come to CBN and test your innovation, play around with all the technology tools and all the ideas you have, without paying a dime to the central bank, or without going through the stringent regulations that we have around the companies that are already on commercial mode. So that's a window that I think we have watered down for financial technology companies to come and play around. We know that they can also provide their services without actually working with the banks. The banks actually hold the account information. And a lot of the services that the financial technology companies provide is a value-added service upon the account information that are held in banks. You want to do for example, funds transfer, you want to do crowdfunding, people are going to move the money from the banks who are already holding those funds. So basically, they'll be providing the technology services upon the account information that are held in bank. Now, the question is, will the banks allow them to connect their technology to their core banking system? Definitely not. No bank will want to risk that because you don't know this company, you don't know its pedigree, and there is no legal backing for its operation. And so we are coming with an open banking regulation that allows these small companies, these financial technology industries to basically be allowed to connect to the information that are held by banks so that they can provide customer-focused products and services to the consumers. Like everybody has presented here, to deepen financial inclusion, you need customized and tailor-made services. You can't just bring one product that you think will fill all the customers. So we need to bring in the financial technology companies to connect to the banks, to use their APIs to provide services to the public. In this case, financial services become democratized. I choose who I want, I choose the kind of service I want, and I choose who I want to provide it for me. But these companies, financial technology companies, need legal impetus to do that because it's all about financial services. And to back that, we are coming with our regulation that will allow banks, more or less like forcing banks because of the regulation, to open up. It's about, CBN is actually coming out with a regime where financial technology companies will have an easy ride in order to, showcase their innovation and come on stream to provide those financial services. I think that addresses that question that you have.
Thank you, Mr. Juma. That's quite insightful. I'm especially excited that we can look forward to the implementation of the regulatory sandbox very soon. My next question is to Maya. Now, as someone who's had significant experience in Nigeria's equity markets, have you ever had to make strategic in the companies that you typically invest in as a result of existing regulation? And where you fail to make those changes, did that affect projected returns?
Yeah, so to start kind of high level, the last year, and also in a reflection of years past, demonstrating the risk, the regulatory risk that we now have to consider when making investments has actually generally impacted the way we not only conduct diligence, but yes, also the sectors that we look at. And it's decreased the number of industries that we're even able to invest in now, not only because of us looking at some of our peers and co-investors who've participated in the mobility space, in the financial services space, in the insurance space over the last few years and been burned due to poor implementation and seemingly overnight radical changes in policy that more or less wiped out entire businesses that have raised millions and are serving tens of thousands, if not hundreds of thousands of people. So for that reason, but also because our fund, if you understand the structure, 80% of our limited partners run later stage investment vehicles. And the strategy of our fund is to do early stage investment and then pass those deals on to our global network of investors for our own liquidity or our own ability to realize liquidity. And the problem that we've faced is that now foreign investors who make up a majority of the growth stage and from sort of post-seed to Series B and on rounds where we would realize that liquidity have been, I more or less would say, scared off to participate in a number of the industries that we are playing because of what's happened with the mobility and Lego state, and because of what's happened in years past in the insurance space, and because of this seemingly overnight change in the minimum requirements for financial services or financial technology companies participating in the space. So yeah, it has had a material effect on the way that we conduct business, and then also the foreign direct investment that's coming into the ecosystem. It doesn't present Nigeria as a more attractive business case when investors have no idea. There are so many risks associated with venture capital investing, and when investing in Africa in general. even in traditional businesses, that when you have to add something that's so volatile as regulation that can change your business's ability to operate overnight, it causes question for some of these big global players to even participate in the space. And that includes global sovereign wealth funds, institutional investors who are limited partners in our own investment vehicles, as well as those directly participating as investors in the space. So yeah, I would definitely say those three spaces, but unfortunately it's caused us to ask ourselves, where do we think that there won't be government scrutiny and significant focus from the public sector? What industries do we think will be sort of left alone? And those are now the more attractive investment spaces, unfortunately, given the way that implementation of government policies has affected the technology sector, I would say, over the last few years of us investing.
Yeah, thank you, Maya. I definitely agree with you in terms of, making Nigeria an attractive business case to invest in. And I'm going to go back to you, Mr. Jimo. Also, the popular fintech around, I essentially startups which are run by relatively young innovators, for instance, Bamboo and Piggyverse. These operators are not as eminent as bank executives and so do not have easy access to these authorities, including the CBN. Yet, a collaboration between the operators and regulators is important to ensure that the regulators understand the products and regulate more effectively. I know you mentioned how the CBN plans to open up to the public, but can you shed more light on how the CBN plans to set up an interactive forum to discuss prospective and existing regulations with stakeholders so that these stakeholders can get a better understanding of what is expected of them?
Thank you very much. As a matter of fact, for our regulatory function to be very effective, we need stakeholder engagement. And to be very specific, we need interagency collaboration, just like Dr. Johnson mentioned. Interagency collaboration is very important, and we're driving that. For example, we are pursuing financial inclusion, and we can't achieve financial inclusion without digitalization. And you can't have strong digitalization without telecommunication infrastructure in place. And so it means collaboration between the Central Bank and the Nigerian Communication Commission or the Ministry of Communication Technology. It has to be well framed. So those kind of collaboration would have to exist, and we have forum for meeting ourselves. Now, coming to the regulator and the public, especially the small businesses, the innovators, and the financial technology providers, we have a lot of channels through which we meet them. But one thing that we have observed is that most times when we call meetings that we want to meet the technology companies and the small companies, they're always scared because they're like, why does CBN want to see me? What have I done? What are they looking? So what we try to do is to actually hibernate. And so we come under several, platforms to talk to some of these companies. For example, we partner with a lot of associations. The Fintech Nigeria is one of the associations that we actually, do have collaboration with. Anytime they want to have this kind of conference and arrangement, we come there and we speak. We also have another forum called the Innovation Forum, the FSI Financial Services Innovation Forum, where all the small companies come together and all the innovators come together and they discuss and we share perspectives in terms of, how the regulator can help them and the kind of environment that they feel would enable them to thrive very well. So these are the kind of, we're actually hibernating, doing hide and seek. We don't want to come into the public and say CBN has a forum where we want to speak to financial technology companies where we know a lot of them are not licensed. So the first impression they'll get is that, they want to know those that are not licensed and they are providing financial services. And that's actually not the idea. The idea is to share from them, from the kind of knowledge and technology, available out there. Just like everyone had suggested here, I think innovation should actually come before regulation. And so we like to engage these financial technology companies, the innovators and the smart guys out there to see the kind of innovation that they have, and then we can create a symbiotic relationship between them and the other financial providers through regulation. That's basically what the regulation is all about, to provide an ecosystem where there is, conduct of regular conduct of behavior and market conduct well regulated. That's basically what we call it. So right now, we are trying to do something that will be more very prominent, will be driven by central bank. We've set up a payment initiative coordinating committee. This basically is going to be a committee that will be looking at future technology, future innovation, things that will drive our future visions. We are reviewing our vision 2020, and any moment from now, we'll come out with a new vision that will basically drive contemporary, financial service offerings and technologies, that are out there to drive financial inclusion. And we are looking at inviting some of these companies to be part of that discussion, where we can actually strategize and tell ourselves what exactly do we need to provide, the kind of regulation, the kind of environment, the kind of technology that is fit for purpose, that is fit for Nigeria, that basically will help us achieve the financial inclusion drive. So once we are ready, and in a month or two, I'm sure we'll get that approval to come into the open, we would invite some of these technology companies, even though they are not licensed, even though we are not directly connected to them, they are not under our purview. We invite some of them to come and share their experience, tell us things that are happening, and how our regulation can support to drive those kind of things. So that's the direction that central bank is taking now.
Thank you, Mr. Jimo. That's excellent. We take the feedback that the CBN is actually open to actively collaborating and engaging with companies in the technology space. Now I'm going back to Mr. Agama. You had earlier mentioned that the SEC is focused on deepening the financial market. In 2019, the SEC released a document titled The Future of Fintechs in Nigeria. And in that document, the challenges that fintechs companies face, as well as certain recommendations were made. It's a year later, and I guess we can ask when we can look to implement those recommendations. I guess the second question is also whether the SEC, like the CBN, is open to receiving collaboration from relevant stakeholders.
Right. Thank you, Dr. Right. Clearly, to just make it as simple as possible, the Fintech Roadmap Committee that the SEC set up, which delivered its report in 2019 and was launched at the Fintech Nigeria Week, was now transformed into what we call the Fintech Implementation Committee. So for the SEC, it's not just about talk, it's also about walking the talk. And so we now improved that committee from being just a writing committee to an implementation committee. And that committee has been working right immediately after the submission of that report. So that committee had also contributed in inputs into the crowdfunding rules and various other initiatives of the SEC. And I'm sure you are also aware that right after the Fintech Roadmap Committee, we had the Virtual Financial Asset Committee, right? Which also has the aim of reviewing digital assets, digital financial assets, and tokens and all of that kind of stuff, which relates to, fintech participation or cryptocurrency, as the case may be. So the SEC had done all of that and will continue to do that. I also need to mention that as part of our desire to engage the market, what we have also done is that we set out to publish or to upload a form called the Sandbox regulatory collection form, which is on our website. We have a FinPort, which is dedicated to fintechs, and in trying to build that relationship with the market, the SEC has also set up a specific division, a specialized division, which is called the Fintech and Innovation Division, which is under my department, also to be able to reach out to fintechs. And the idea is to make them understand that we're in this business together. The development of fintech or the nurturing of fintech will bring great prosperity for this nation. The SEC is fully aware of that fact, and as such, has tailored its policy towards that area. And that's why you find out that I think we are the most friendly fintech regulatory institution. We are, by all means, because we engage with people. We've been doing that, and of course, the fintechs are no more afraid of us. They see us as partners in business, and they're always coming around.
Thank you, Mr. Agama. I'm sure Mr. Jimo would also say that the CBN is also friendly and looking to collaborate as well.
Well,
So,
he has his mouth to speak.
Well, just like I said, I really don't know why people think that the regulator is always very hard. And I think there is this principle that everyone should understand. I usually, say this when I have the opportunity that in any vehicle system, you have the brake. And people think that the brake is there basically to stop the car. Whereas the brake is only meant to enable you speed. Because if your car does not have a brake, you will not speed. What gives you the courage to drive at a high speed is because you have a good brake. That's what the regulator does. The regulator basically checks you to make sure that you don't land yourself in trouble. Now, it's an ecosystem where you have different characters coming to play, different segments. And so we need to ensure that we have proper market conduct when people are more responsive in terms of service offering and in terms of how we interoperate. That's what basically the regulator does. The regulator is not there to scare anybody, as was said in one of the speeches here, that we're even supporting some of these fintech companies. Some of the fintech companies that we have already given licenses to, who are expanding the agent outlets. We are supporting them with facilities to make sure that they can do this thing. In some other instances, there are several companies, fintech companies, that have come here to us for support, and we do support them, even though they are not licensed, but we just support their program basically to understand, where innovation is going and how we can support. We are actually trailing the innovation, but we have to move almost at the same speed, because if we don't move at the same speed with which the fintechs are moving, we'll be caught flat-footed. That's why sometimes people think that regulation is coming, before innovation. But the fact is that innovation usually comes before regulation, and that's how I see it, and that's how it's going to go, with the new mentality that we have in CBN. We will allow innovation to thrive, but please, we want everybody to be very, very friendly, with the central bank. When you are invited to come and partner with us, it is not because we want to check whether you are operating an expired license. It is because we want to open up your brain and see the good things you have there, so we can help drive this nation to prosperity.
Thank you, Mr. Jimo. We take the feedback that both the SEC and the CBN are looking towards actively participating in the ecospace and engaging with the relevant stakeholders. Now, before we go to our next panelist, I would just like to remind our viewing audience that we're still taking questions. You should have a Q&A chat box, and you can type in your questions, but please also indicate the particular panelist that you would like to respond to your question. My next question is to Maya. Mr. Jimo had earlier alluded to the need for companies to have adequate legal representation. But as someone who has significant experience, at what stage do you think founders should look at adequate legal representation? Do you think that there is a need for some sort of
I'm not sure if it's my line or your own, but if you can repeat the last 10 seconds of your question, you got a little bit fuzzy there.
Okay, can you hear me now?
Yes, I can hear you clearly.
Okay. So I said that practically, do you think that there is a need for some sort of trade-offs to guide the compliance requirements we would need in Nigeria? And at what stage would you advise founders to begin to look at getting legal representation?
Yeah, as far as when I would advise founders to start thinking of and looking into legal representation, of course it would be from the beginning, because as I'm realizing now, we've made 20 investments from our fund, and seeing the way how seemingly unintentional initial structural issues can cause major problems with the founder's ability to fundraise in future rounds. I would say from day one, or even before day one, before incorporation, the founder needs to be working with a legal representative to determine not only where they're going to be incorporating their businesses, will be in foreign or domestic, and from whom they anticipate raising funds, because that will also influence where they decide to domicile and how they decide to operate. But there are so many intricacies, and that's not before you would even come to the point of talking about questions and concerns around regulation and the company potentially being affected by changing policy or by the policy that exists domestically as is. And what I've found is there's no real way to sort of curb that risk indefinitely. And if anyone has any other suggestions or thoughts on this, I would love to hear it, because as of now, the concept, I bring it up again, of these changing regulatory risks just can't be resolved, because they're seemingly coming out of, I don't want to say left field, but there seems to be a disconnect between private sector and public sector as far as the way these policies have come to light, and the way that we've sort of looked into resolving this is working with legal firms and encouraging all of our portfolio companies to work with legal firms who do have a relationship with the regulators that exist, so there can be that actual direct communication. But as far as founders who don't have those funds and who don't have ability to be in touch with those parties, they're kind of out of luck. It's not as clear and transparent as the other markets where we have worked in. And I did have a question actually for some of the other participants, the public sector participants from CBN and SEC. May I direct a question to you guys? My question, I'm curious. So this has been something I've seen implemented in the U.S. and other nations where there are specific terms around limiting the business interests of those who are building policies specifically in the financial services and other industries. So the policymakers are unable to have business interests in the sectors where they're advising. And I just wanted to float that concept and see how it would be received if that were here. What do you guys think of a policy that would do such things in Nigeria?
We'll begin with Mr. Gama. Thank you.
Yeah, I need to understand the question properly. A policy that will do what?
Okay, yeah, I'm happy to repeat. So I've seen sort of a policy that would prohibit those that have any business interest in the sectors they're advising from participating in actively creating regulation and policy in those spaces. Because my concern and what I've noticed, not just in Nigeria but in the U.S. and the UK, is it creates a lack of alignment and incentives when those actively advising and building solutions in the regulatory space have business interests, particularly in traditional sectors, the ones that are sort of at risk for disruption. So what do you think about the implementation of policies that would prevent those with business interests from actively advising or creating policies?
Okay. If I understand you very well, these are issues of conflict of interest, in the sense
exactly.
that, yes, in the sense that you are advising in that area and yet you are investing in that area, or you are part of that, you want to do business in that area. Of course, that will stifle competition. So for us at the SEC, regulations are available that tries to view the existence of conflict of interest. And if we discover such, of course, approval will not be given for any such transaction. However, it's also important that we also have situations where you need to disclose upfront your interest regarding whatever you are doing vis-a-vis the advisory function that you are undertaking. So everybody knows and sees, because in securities regulation, the hallmark is about full disclosure. And when when full disclosure is made, the responsibility onus lies on the investor to understand that, look, this is the situation and this is the case. Do I really want to be involved in all of this? But clearly, the SEC frowns at situations of conflict of interest and certainly will debar anybody that's involved in such. And there are regulations to that effect.
Thank you, Mr. Agama. Mr. Jimo, any words?
Okay, I think Mr. Agama basically captures it very well. It's basically to avoid conflicts of interest and to prevent abuse of dominant position. These are the two key considerations why we wouldn't allow such. For example, nobody will expect that central bank will go and open a bank and start competing with the banks that it regulates. Everybody basically will go and keep their money in the bank that is being operated by central bank. Just the same way too, in our own environment, we don't allow card scheme who are supposed to be very neutral in providing services to the bank to now go and set up a small company that is now switching, their transactions. Because basically what will happen is that there will be prioritization. I'll first treat my own service if I run a switch for cards that have been provided by different schemes. When those card transactions come to my switch, for example, I will prioritize to switch my own first before the other. Those kind of things. And so those are the considerations why someone who provides, services to the regulator or someone who is already part of the regulatory process will not be allowed to provide services under that same regulation again, because you basically usurp all the various policy lines that have been issued by that regulator. So it's basically to avoid conflict of interest and to prevent abuse of dominant position.
Okay, thank you, Mr. Jimo. I think that actually answers Maya's questions. I think Maya's happy with that. And the final question will go to Kola, and this will flow from what Maya said in terms of the lawyers coming in the early stages to help with structure and where to incorporate, for the startup founders. So now, in terms of promoting the growth and development of the technology industry in Nigeria, what role can lawyers play in proactively assisting and supporting both the regulators and the tech companies?
Man, you just threw this dog a bone. So I think I spoke at Aluko and Oyebode, I think sometime last year or the year before, and I threw this challenge to the team, and I'm throwing it again. Create open source deal documents similar to the Y Combinator Safe or the 500 Startup KISS, and open source them. I think that what that does is, one of the challenges with our ecosystem is that far too often early stage companies get into trouble with signing documents that they should never sign because they can't afford legal advice. And in some cases, even when they get legal advice, the lawyers, because again, this is a new asset class, the law firms don't necessarily understand the nuance. So I think that there's an opportunity for law firms to play a leading role. And I know that law firms are commercial entities, and so why should you be open sourcing? But there is a brand benefit to taking the lead and paying it forward, as we say in our industry. So that's something that I would love to see. And again, it's something that we as Ventures Platform would be very happy to collaborate on in terms of creating standard deal documents. When Y Combinator is not a law firm, but when they did that years ago, it completely changed and increased the velocity of deals in that market. And today in Nigeria, we're now using those documents to consummate deals. So I think that's one thing that the legal industry can do. And I certainly would love to see it. And again, in doing that, it will be wise to do that in consultation with all the investment firms, the funds, and perhaps the startup ecosystem as well. The second bit as well is early stage companies oftentimes cannot afford to do retainers with law firms. But I think you've got to, just like we view early stage companies as pipeline, I think you've also got to view those companies as pipeline and start to nurture relationships earlier. Because oftentimes the company that becomes $100 million company in 5 years is not always obvious. So those are two things I'll drop. But before I round off, I'd just like to say, look, whether we like it or not, government has a lot of power, regulators have a lot of power, but you simply cannot regulate or use legislation to boost innovation. Rather, let me take that again. You cannot legislate innovation and IP. It's, you know, it's off the mind, and it has to be self-driven. Neither can you create it by force or by fiat. You cannot pass an edict and all of a sudden have a thriving ecosystem. And generally speaking, when markets feel constrained or capped or pressured, the incentive for, you know, competitive innovation starts to disappear, and it certainly moves to other markets. And so I think this is the caution that I would like to end with, to say we have to move from overcompensating for regulating and being a gatekeeper to becoming an enabler. And I'm glad to see, you know, that the SEC is doing this, the CBN is doing this, and we can only ask for more. Thank you very much.
Thank you, Kola. Thank you so much to all our panelists and our keynote speaker for joining us today. Thank you to our viewing audience. Indeed, I think that, the feedback from today's session is there is a need for engagement, there is a need for collaboration, and innovation will precede regulation. For the lawyers, I think that we need to begin to innovate within the context of our reality, as Kola earlier mentioned. We'll be taking our questions and answers now, and this will be moderated by Beijing. Thank you.
Thank you, Mitokwe, and thank you to the panelists for the great panel discussion. It was very enlightening. We're now moving into the question and answer session. A couple of questions came in during the panel discussion, and we're going to take them now. However, in the interest of time, we may not get to all the questions. So going forward, as you're sending in your questions, please also put your email address next to it, and we'll ensure that you get responses at the end of the webinar in the event that we're unable to get to it. The first question is to Mr. Agama. In March of this year, the SEC released proposed rules to guide private companies with the structure and mechanisms to get public capital through investment crowdfunding. How soon will the crowdfunding regulation be implemented? And does this regulation pose a new stock market for private companies? And does this also threaten the private equity market in Nigeria?
Right, okay. Let me start from the point of threat. Certainly not at all. The market is wide enough, is big enough, and has a lot of opportunities. So rather than looking at the threat, it's important that whoever is asking that question looks at the opportunities. That's number one. Number two, the regulations, like I said earlier, is being reviewed, and the rulemaking process at the SEC, it's a rather very thorough one. And that is why it is not just, a shelf-made rule that you just pick and you bring out. We need to contextualize rules in this country because our behavior patterns are very, very different. The investment attitude is very different. So you need to understand everybody, and you need to understand the regulatory environment. You need to understand finances and a lot of other things that feed into any rule-making process. So that's what we're going through. We received over 200 feedback on the crowdfunding rule, and we have to look at each and every one of them and understand why they are being said. Does it meet what we desire? Does it meet what we think will be good for the market and the investors? So all of these are the things we put into consideration. That's why it's taking this much of time. But I can assure you that we're working very hard on it, and we believe very, very soon the crowdfunding rules will be available to the market.
Okay, just continuing in that line, what legal synergies are being taken on board from the CAC in view of the conflict of the regulations with the CAMA, which negates public invitation by private companies?
Okay, so when you say public invitation by private companies, it's different from talking about a platform. If a platform is going to raise money platforms are registered by the SEC, and the IISA gives us that power to register platforms. So the dynamics are really, they're different, really. So people that look at it from the face of it do not see crowdfunding as being something that is acceptable or accessible by the public. No, there are two different things. And the law permits us, the commission, to register marketplaces, to register platforms, and to regulate those institutions or those entities. So clearly, there is no conflict of interest. It's just a matter of how you look at it. It's like when you say a fund portfolio manager that invests in private companies. When the fund portfolio manager or venture capitalists or the private equity firms that invest in private equities, they have raised money from the public and they're investing in the private equity firms, in limited liability companies. Is that a conflict of interest? No. Or is that against the law? No. They're providing funds. All we're talking about is providing capital and providing them through a very legal means. So clearly there's no conflict of interest, and that does not pose any threat to the stock market or the KAMA itself, as the case may be.
Okay, thank you. Thank you very much for that. The next question is to Mr. Jimo. What's the status of the payment service bank license? Approval in principle was granted 6 months ago, and nothing has been heard about full licenses, particularly in light of the COVID-19 lockdown. This is time for PSB to drive financial inclusion.
Sorry, thank you very much. In fact, I was actually responding to some of the questions via chat. I didn't know I was going to be asked again, so I've answered some of these questions. The payment service bank license, thankful enough, we have approval for 3 companies to do approval in principle to basically go and set up their infrastructure and test their systems. And I think very, very soon, hopefully, in the next few months before the year ends, they'll be granted the license to go commercial and start offering those services. We need them. They are going to provide digital financial services and basically targeting the underserved and the underbanked. So it wasn't a mistake that we came with PSB. We knew what we were doing. So we haven't backtracked. Those companies will be giving commercial license anytime from now.
Okay, thank you very much. The next question is for both Mr. Gama and Mr. Jimo. What is the CBN and SEC doing on the regulation of blockchain and cryptocurrency in Nigeria?
Okay, Central Bank doesn't regulate technology. We don't regulate any technology. So our own is to make sure that there's financial system stability and all that. What we regulate is the products. Financial service products that come that rides on this technology. So if you use a blockchain, for example, to provide mobile money or to provide funds transfer service or to provide remittances, then tell you to comply with our remittances regulation or mobile money regulation or funds transfer regulation. We actually don't regulate the technology, and we have never regulated technology.
Right. Okay. So clearly for us, what we are doing is we have a regulation on digital asset exchanges, which is before the Rules Committee, which aims at regulating digital asset or cryptocurrency exchanges. Clearly, for any platform to operate in Nigeria, that platform or marketplace must be registered by the SEC, because registration is the hallmark of regulation. So that is very, very important and crucial. So that's what we are doing. Besides that, I also mentioned earlier in my brief address that we had a blockchain/virtual asset committee, which was to look at the entire gamut of regulations around blockchain and virtual financial assets. And as has been said by my brother Jimo, our responsibility is not to regulate technology. Our responsibility is to regulate the services that technology provides that falls within the ambit of our regulation and the law itself. So that's what we are doing. So if you use blockchain to provide transfer services, registry services. We will regulate you in that respect. If you use blockchain to provide depository services, we will regulate that. So that's exactly what we do. And in every sphere that you want to operate and you use technology to enable that sphere, then it's our responsibility to regulate such. And that is what we do. So that is why you find out that fintech, blockchain, and all of that cuts across so many areas besides, capital market and banking. Of course, they are in the health sector. So we wouldn't go to the health sector to go and regulate a blockchain provider. No, we wouldn't if it does not concern us. Our business is what concerns us, and that is the capital market. It's our forte.
Thank you very much for that insightful response. The next question is also to Mr. Agama. This person said, a bridge in the communication gap remains a challenge in striking a balance between innovation and regulation. Can you speak to us on how the SEC has been able to leverage on the tools of digital media and alternative data in getting take-buy-in of consumers and innovators towards developing a practical, effective regulation for the fintech industry?
Okay, I'm sure the questionnaire has not been to our website. We are in all handles. We are in Twitter, we are in Facebook, we are in LinkedIn. So those are digital medias, and we've been using them. Of course, we are on webinar now, which means we are using it. So we use all of this medium to reach out to investors and to the consumers. So we will continue to. These times are the times for technology. So clearly, anybody that does not take advantage of the technologies available to reach out to the masses is just not doing what he should do. The traditional means are still there. The newspapers are there, and they're all getting digital. The radios are there. So we will, as much as possible, within the constraints that resources provides us, reach out to everyone via digital means, and we'll continue to do that.
Okay, there's one more question to Mr. Gama, Mr. Jimo. You both stated that innovation, particularly like Nigeria, with the benefit of foresight based on occurrences around the world, the regulator should not have to wait for innovation to drive regulation. In fact, I think the person said, in fact, they think it is at the core of formulation of laws. Shouldn't the regulators have a solid team that prospects changes and ensures regulators take care of these issues even before they arise?
Well, that's basically the other side of the coin. I think in most, each country has its own perspective. For example, mobile money in Kenya. Mobile money in Kenya came as an innovation before the Central Bank of Kenya, provided the regulation to drive it. In our own case, because we've already learned from what was happening in Kenya, we came out with the regulation before we allowed the operators to start operating. But I'm saying technology changes, and the rapidity of change is so fast that I'm not sure any regulator will be able to keep, with the pace of changes. So what we do sometimes is we just wait and look. When technology changes and innovation comes, we ask, how does this work? How does it fit into the economy? What injury does it present to the consumers? What are the benefits? Those are the things that will now lead us to have, some kind of conversation around the regulation. We've had a situation where someone brought an innovation and we say, look, you just go and run these products and services. We don't know much about it, but make sure it doesn't pose any danger, any consumer, related issue, any risk to the entire financial system. And we allow you to run. When we think that, yes, it is ripe enough, we have understood it, we come out with regulation that ensure that other parties, other participants that are coming into that ecosystem all conduct themselves, properly. So I think the proper way to go is to allow innovation to thrive and regulate the regulation folks. But the regulation should move at the same pace. That's my concern. You should be able to move at the same pace as the innovators. Because otherwise, you just be regulating something that's no longer even available to be regulated. that's just my own perspective. I'm not holding forth for the general perspective of the central bank, but me as an individual, I believe that we should allow innovation to thrive, and then we back it up with the regulation to give it the legal impetus for it to operate within the country.
Right. Okay.
Thank you for that.
I think clearly that the questionnaire probably is looking at it from a narrow angle. When we say innovation precedes regulation, we are not saying that the regulators do not have capacity, inbuilt capacity, as to whatever is going to happen or is happening. Of course, we are all being schooled every day, and we all belong to international associations or organizations that provide the opportunity for us to forward learn. But even as we forward learn, that does not mean that we we have that particular product already in our country. So we forward learn and wait for those things to happen, then still understudy it within the context of our environment before we introduce regulation. So that's how it goes. It's not that you just set out regulations and the product is not here. And when it comes into your own country or your own clime, it is a different animal. Then you now go back again to regulation. So that's not how to run it. So regulation is a different kettle of fish. People must understand that, yes, the basic thing that you need as a regulator is to have the background information, the background knowledge to be able to learn. It is not to have the knowledge while you are there when the thing has not even come. So once you have the base to learn, you are always there to learn, and you learn fast to be able to catch up with innovation. That's what Mr. Musa had just spoken about. So clearly, innovation, no matter what anybody thinks about it, the population of people in this country are far much more than the population of the regulators. So how do you expect that the fewer people as regulators will catch up with the number of people that are innovating? So you just work and make sure that you meet them where they are and indeed run faster than them when you get there. Then you can deal with the issues that will come up in terms of risk associated with innovation. Thank you.
Thank you very much for that robust answer. Both Dr. Johnson and Kola spoke about the uncertainty in fintech regulation. What areas do you think there is uncertain regulation, and how can regulators assist to provide clarity?
Well, I guess that question is not for the regulator anyway. I guess you're asking, a regulator is basically asking this question.
Dr. Johnson and...
Oh, okay.
Thank you.
Yeah, so I guess the question here is, what areas, again, do you want to take the question again, sorry?
Yes. You mentioned about the uncertainty in fintech regulation. What areas are uncertain, and how can regulators assist to provide clarity?
Well, I mean, I think the challenge is we're seeing a what I would say a medley of business models. You're seeing wallets that doing investments. You're seeing use cases like AgTech that are also crowdsourcing. You're seeing companies now starting to leverage trade in cryptocurrencies, and so I think the categorization is no longer as crystal clear as it used to be. Where you had payment processors, you had lending companies. We now have a new category that is looking like what you may call challenger banks, right? And so I think that creates some uncertainty for the different operators, and I think that is absolutely normal. If we say innovation should precede regulation, and I know that that's been an ongoing refrain in this conversation. And so, I think that to some extent, the regulators also have to come, and are doing a great job of coming up to speed with how quickly folks are innovating. And so sometimes that categorization creates a bit of confusion. Sometimes fintechs don't even know what regulation they fall under. And as the director from CBN has said, there's also a reality that fintechs are oftentimes afraid to engage with the CBN. So I think a lot of investment has to be done on the part of the CBN, for instance, to maybe become more approachable, right? So that you don't have to go through third parties to engage the fintechs directly. Because I don't think the issue is a desire not to be regulated as much as a lack of understanding and an apprehension and a lack of trust. And so I think bridging that will help to sort of solve this issue. Thank you.
Thank you very much for that very robust answer. For the questions that we're unable to get to, we'll ensure that we'll circulate them with the panelists and ensure that you receive responses at the end of the webinar. Thank you so much. On behalf of Aluko and Oyebode, we would like to say a huge thank you to everyone who joined us. We hope to bring to you more events like this in the nearest future. We would like to say a very special thank you to the panelists and the moderators. Thank you for contributing to making the webinar a huge success. We definitely did a lot of learning today. Thank you once again to everyone, and do enjoy the rest of your afternoon and stay safe.
Thank you for having us.
Thank you for inviting us.
Yes, thank you for having us.